It's been a while since my last video lesson, so I wanted to get another one out there today. The theme of this video lesson is going to be focus. People still to this day ask me, when was it that you thought you mastered the stock market? When did it all click for you? And what you guys need to understand is that it's a journey. I've gotten to where I've gotten, but this is just the beginning. I'm still so much more to learn, so much more to be disciplined on. Um, that this is, like I said, just the beginning. And so this is my profit chart as since 2018. And it's kind of going parabolic right now. You have this nice first little spike up consolidation, and now it's breaking past the highs and going crazy. So what really was this? What is the story telling us? Right here is when I really started reaching consistency, right? This is when I stopped longing. I realized that I'm no good at longing. It works for others, it just doesn't work for me. So I focused. This was the first time I said, I'm going to focus and take this professionally. And I said, I'm only going to short sell. And then through short selling, I found OTC short setups. And luckily, this is in the time of Bitcoin and Canadian pot stocks going crazy. And I really got to learn the OTC short setup firsthand, practicing, saying, I'm going to nail it the next time. And then the next time was the next day. And I was able to really increase my account size. And when we got into the $140,000 range, something happened. The OTC market died off. My OTC short setups were no longer there. So what happened? I had a lot more money in my account. I went back to buying. I went back to shorting first green days. I went back to trying to scalp moves every time I thought I was right. And what I've learned is there's no point in being right. You don't have to feed your ego. Just because you can be right about a play and make profit, does that mean it's worth it? Is what you should be asking yourself. You need a 50-50 chance of being right regardless. So in this choppy consolidation zone of my profits, I had to rethink my strategy. OTC shorts were out. Longs I still was no good on. Better, but still no good. And I had to figure out what kind of shorts I was great at. So again, focusing deeper. What shorts was I good at? And through this period of introspective reflection, I lost quite a bit of money. I went down from 140 down to 110. I think was the low. And that was scary. For a moment there, I doubted myself. But I kept driving. I kept looking deeper. I kept saying to myself, where can I have an edge? Where can I put myself in situations where I generally don't take losses and I can increase my win percentage? And through that digging, through mentors, through questions, through practice and discipline and focusing on the right things, I found edges. I found edges in short selling. That before, yeah, I knew how to short sell and I made 100 grand just knowing how to short sell. But in this consolidation zone, I learned how, when, and where to short sell, what to short sell. Not everything I think I can make money on. And then it really changed. And that was my most recent change, and that was as of December. And I haven't had many red days since December. My size is still completely under control. I'm never playing more than 10 to 30K position sizes. Very rarely is it more than 30,000. But my percent win has gone up. Not how many times win-loss, although that has gone up as well. My percentage gains have gone from a rough average of 7% to 13%. That's average. So a couple of them I'm really hitting out of the ballpark to boost that average up. What's changed? I have found edges. I dug deeper, and now I really focus. I have rules. Because of how much I've dug deeper, I now know what to avoid and what to look for. And if I don't see those things, I can pretty much write off a stock so quickly that I don't trade that day. So this week I made 3 trades. 3 trades worth talking about. And that's all you need. 3 trades a week? God, we're blessed. The ability to make 20% in a week is phenomenal, let alone 3 freaking chances. So let's go over them because they were really sick. So the first play we'll go over is YRIV. We're going to go from most recent to least recent just because that'll be most recent in my mind. So YRIV. First things first, what would I categorize this as? I categorize this as a short into resistance play, right out of trading the tickers. You have a stock that for multiple days has run from basically 40 cents all the way to $2, which is quite extended in my book. There's also, a lot of Twitter talk about this company and that it's a complete fraud and scam of a company. People do a lot of research into penny stocks. You don't really need to do that much hard work. You just need to do smart work. Follow the right people on Twitter, listen to what they say. If they say a company's a fraud, whether I want to do the research or not, I know I don't want to long it, And I definitely want to short it when it runs a couple 100% in a couple days. So what made this day different from any other day? Well, this day was the day that it was truly extended. I mean, into the dollar range was extension, but it was also a breakout. So I definitely wanted to be cautious on the day of its breakout and not really get into eager. The next day, it had its first breakout day and it was trading some massive volume. So again, I don't want to step in front of massive volume. That's just a rookie move, especially when the stock is green all day. Then this next day, it kind of opens up at $1.80 pre-market and it has that violent pull all the way through green red. So to me, that's the first time it slapped green red. It didn't absolutely pull, but it's weakness for sure. And I learned from setups like NBEV and NIO that when you see weakness pre-market, it's time to go after a shortened resistance if that opportunity is there. So right at market open, we had that quick spike right into 190. 193 was resistance from the previous day. So I began taking orders at 185. And that ended up being a really good entry because pretty soon after that, we got this nasty hard crack. And I'll put my entries up for you guys. So again, we had that pop in the morning. I started taking size at 185, chased a little down to 180. Once we got that hard crack, that confirmation that 193 is the top, that it's a double top, that there is resistance there, I have a lot more confidence in that level, and we're still not too far off of it. We're up 400%. So I think if this is going to crack red today, we're going to see some downside. So at 175, I throw in some ads. I get my size bigger, and now get to a 180 average. So I'm risking roughly 13 cents, and reward is like minimum 50. So 1 to 5 is there. Plus, what are the odds to take a loss on this? I do factor that into the equation. So I add. And in this consolidation zone, I sit patiently. Either I'm right or I'm wrong, and I'm happy with those results. We immediately get that crack through green red. This first bounce here is very interesting to me as well. This is that first bounce red. Kurtani loves taking this short. It's one that I'm trying to get better at taking. I do get a little nervous. I don't want to mess up my average. But in hindsight, this becomes a great risk to use when shorting bounces. So, moral of this story on this bounce is, yeah, that first slap red, first time the stock is red on the day, you could definitely go off a bounce and make reasonable risk assessment on previous resistance throughout the day and keep your risk reward under control. It's just something you have to see enough times to learn how to play when it does go from green to red and then has that bounce. Then we get further crack, and I love to see that. That's when I cover my initial position from this morning, all the way down at 35 cents, locking in roughly 45 cents a share. Then it bounces, very predictable. It bounces roughly 20 cents and starts to stall out 145. 145 is where it caught this morning. It also where it caught the day before. So it makes sense that would be resistance again. So I start taking some positions into that area. We consolidate for a while, and then we bounce up back to that area, and I still want my ads. I'm still thinking this is first red day. Generally, first red days have a second red day. If not, they break their day low. So I'm going for this day low to be broken when I'm shorting 145. Took another 7,000 shares here and just wrote it down. Once we cracked the low of day, I took off. I'm done with it. That's all you need to do every single day, and you'll be phenomenally profitable. There's tons of percentage wins to be made on this. You could short the morning spike. You could short that first bounce, red. You can short the bounce short, first red day bounce short. Those are all viable options. Moral of that story is you never need to rush. You never need to be in pre-market. You never feel like you missed the trade. If you are watching the right volatile stock, you didn't miss crap. There's going to be other opportunities. Stay focused and know how these stocks behave on certain dates. Become a master. Put in the 10,000 hours. That's YRIV. The next one I want to go to is AVEO. AVEO is another really nice one. I'm going to go back to so first I'm going to explain the setup. This one, overextended gap down. First thing, what do I see? An overextended gap down. Where do I see it? I see it on this day right here. What do we have? We had this nice run up from the 60-cent range through the breakout of $1 and then into $1.90 on massive, massive volume yet again. So that first time that it's gapping down, that first time it's red on the day, I absolutely want to short into strength. So now let's look at the intraday chart. I'm gonna flip to the 2-minute and zoom out here and try to get on the day. So AVEO. Now, this was its previous day when it had its massive run from $1.20 to $1.90. It closed at roughly $1.60, and the next day we have a gap down, roughly 30 cents. It opens up and even goes lower down to 15 cents. And what am I thinking on the stock? The stock's a bigger float stock. It doesn't move. It shouldn't move very fast. So when you get a move from $1.15 all the way up to $1.60, that's a very quick move for this stock. And what do you know? Green red is right there at $1.60, the previous day's close. I want to move this line right where it closed. Right? That's where it closed the day before. And then you have that nice short into strength right into green red. And then you let it fade into close. And that's exactly what I did. And it's a black and white play. The trick is to be patient, not to be shorting when you think, the day high is going to be the resistance, because that's not the resistance you originally planned to play off of. That's not the resistance that overextending gap down calls for. Keep it simple. Some people augment plays to mimic other traders. That's not what you should be doing. You should only take setups that mimic perfection. This spike right in the green red is absolute perfection. Maybe you add on this lower high here. Either way, you have a nice 155 average, risking roughly 5 cents. And what's the reward? As we continue on throughout the day, this thing does nothing but fade. And then there was an after hours offering. So some really, really decent profits were able to be made here. Last one, Pulm. Very, very, very similar situation to ABEO. If not, I would say identical. Pulm, you have this really nice first green day. It's not a multi-day runner, but it's a really nice extended first green day, roughly 100% from its lows. The next day, it gaps down. So let's take a look at the intraday chart. So again, this is the day before where I had this massive run and put up a bunch of resistance up in the threes on such massive volume, 58 million shares trade on the day. It makes you think, do you think it ever is going to be able to break that kind of resistance? Let alone the next day I'm spiked from the lows. And that's what I weigh heavily into my trading theory. Like what's it going to take for the stock to move more than 100% on the day on such massive volume? This next day, we come to market open, and this is where it closed. Probably a little bit higher, top of those perks. Next day, we come to market open, and this right here is market open. We've gapped down 20 cents, and we head lower, just like ABEO. We consolidate for a bit, and then have that really nice spike up towards green red, roughly 15%. And again, red green rejects. We put in a lower high, and we fade. We fade off. And then eventually, just like ABEO, which does not happen every time, it's purely a coincidence, we had an offering. And this stock went all the way down to $1.20. Again, really, really good gains. Sometimes you get lucky with those after hours offerings, but that's kind of the benefit of shorting these piece of crap stocks. Piece of crap things happen. So the moral of the whole video lesson is focus, guys and girls. You really need to focus on your plays. My focus has been backside. I hate shorting first green days unless for reason to. And I have my reasons. I have my edges. And I very rarely short first green days. And if I do and I'm violating my rules, I take losses. And I'm focused enough to realize that. And so I've cut out most of those trades. And I'm specifically shorting backside moves. I know what backside moves now look like. Generally, they are red days. Keep it black and white. Keep it simple. If you don't know what a backside is, wait till the stock's red after multiple green days. That's generally backside. Keep your focus. Wherever you're experiencing consistency, continue to watch there. There are so many ways to get distracted. Don't be a sheep.